Fair value gaps, fair value gaps, fair value gaps. Welcome back. Today is episode 4 of our Futures Bootcamp. I'm very happy to see you again. And if you couldn't tell, today's video is about fair value gaps, fair value gaps. So we're going to be breaking it down just like we have the last 3 videos. Now, before I do, I first want to say we've already seen that viewership drop off. So I want to congratulate you and tell you that I'm proud of you for continuing to take action, continuing to show up, and continuing to get better at trading. It's one day at a time, one trade at a time, one step at a time. It will happen as long as you simply keep going. Now, of course, we'll be talking about fair value gaps. We'll be breaking down everything from what fair value gaps are and how we identify them to how we can actually put these and use these with our strategies to help us turn a consistent profit. Now, of course, this is not financial advice, and fair value gaps are not a strategy on their own. This is something that you pair with an overall strategy. For example, I use fair value gaps with both our BB model and our orb model. Both of these get better with our fair value gaps, but they are not needed for our strategies to perform. Now, the BB model, we both know, yes, it does need fair value gaps, but the orb does not. It is just something that is going to help us out or give us more confluence or confidence when we are taking our trades because we understand what the fair value gap actually is. Now, we have a lot of information to jump into, so I don't want to waste any more time. Make sure you guys do drop a like, subscribe, turn those post notification bells on, and drop a comment down below if you guys have any questions or comments about this video. It really does help out, not only for the support, but I want to be able to give back to you guys if you do have any questions. Now, of course, we are also giving away a free eval tomorrow morning in our live trading session if we are able to get 50 likes on this video. All you have to do to enter that is subscribe, like this video, click the first link in our description down below, join up on our free Discord, and be there tomorrow morning when we do go live and give away that free eval as long as our goal is hit. Now, that is all I have for you guys. Let's go ahead and jump right into fair value gaps, fair value gaps, fair value gaps. Now, first of all, we need to talk about what fair value gaps are before we talk about how to identify them. Now, a fair value gap is an imbalance within the market. This imbalance is created by buyers or sellers aggressively pushing the price in that direction. This forms an imbalance because we have candles that create this fair value gap where there are no buyers or sellers on the opposite side of where the direction of the candle is moving. So if the candle is moving up and we are seeing a fair value gap get created, that means at no point were sellers ever in control or able to step in for the most part. That forms the imbalance that needs to come back down and be retested or broken through. Now, of course, that is complete jargon right now, but I will break it down to a point where you do understand it in just a second. But the main idea of how we identify these is going to be a fair value gap is a 3-candle pattern where the first candle and the third candle's wick do not touch. Okay? That is it. That is it. Now, we'll talk about how to use it, but let's go ahead and break this down because it really is not that hard. There's a few small things that you need to follow, but it is not that bad. And by the way, you can use these on any single time frame. The 1 hour, the 5 minute, the 15 minute, the one day, the 1 minute, the 1 week, the 1 month, it doesn't matter. You can use it on absolutely everything, and it does work, okay? Now, once again, it's not its own strategy. You need to pair it with other things, but it is available on every single time frame. Now, talking about how we truly identify these and what this fair value gap looks like, right? So we have a bullish fair value gap and a bearish fair value gap example. Now, before I say anything more, it is a 3-candlestick pattern where the first and third wicks do not touch, but it does not matter what the color of the candle is. A lot of people get confused by that, and that is by far the most asked question, so I'm answering it now. It does not matter if all 3 of these candles are red, or if we come up, say we come up and we have green candle, green candle, green candle, okay, then we pull back and we see this, right? Or it doesn't matter if we have, red candle, green candle, if at the end of the day, these first and third wicks do not touch, okay? So first of all, with the bullish fair value gap, this is my example of this. See how we come down, and then we come up making this fair value gap. That's totally fine, okay? And it's totally fine as well if we start down here and we just continue to go up. That is totally fine. But please understand that it does not matter because a lot of people get all worried about that and start to put more into your head than you need to. Just understand that it's a 3-candle pattern where the wicks don't touch on either side. That's all you need to know. And I have that drawn out right here so you guys can see. Our first candle, wick, right here, highlighted by the blue line, okay? Third candle wick, highlighted by the blue line. Now, this area in between these wicks is your fair value gap, right? Should be very, very simple, okay? And we'll talk about what to do with this, but first it is most important to identify it, okay? Obviously, none of us know what to do with it yet, but that's why I'm here, okay? So here is your bearish fair value gap. We have our wick high, where we can draw exactly where that wick high is. Then we have our wick low. Well, this candle's wick high, but the lower candle's wick. And this is our gap, okay? So that is our gap, and that is how we draw out both a bullish and a bearish fair value gap. And this part should be very easy. Once we start getting into a little bit more of the harder topics with this, won't be so easy. But that is why you have a notebook out. That's why you are taking the time to understand this. And that is why, please, if you need to rewind this video 2 minutes, go do it. It's not going to kill you. Understand all of this, because this is the foundation for what we are going to use it for in our strategies or in the market in general. So please, please, please make sure that you do understand this. The first and third wick cannot touch, okay? Now let's play a little game called Guess That Fair Value Gap. All right, so this is the game where we go ahead and I draw a little fair value gap for you, and you have to guess, is that a fair value gap or is it not? Now let's go ahead and check this one out right here. I'll give you guys 5 seconds. Is this a fair value gap? No, it is not a fair value gap. It should be very, very clear that this is not a fair value gap. And why? Because our first and third candles wicks touch. Okay, so we can see clearly if I were to draw a line through it, they touch. So it is clearly not a fair value gap. Not a fair value gap. No, no, no. Now, round 2. Get ready. Is there a fair value gap here? Yes, there is a fair value gap here. Now, this one is a little bit more challenging. Why? Because there is no wicks on the first or third candle, at least in the direction that we need them to be. But we don't need them to be, okay? If the candle wicks aren't touching, then it's a fair value gap. If there are no wicks, well, that means that they're not touching, so it's also a fair value gap, right? So your fair value gap would go from right there all the way down to there. So from that candle's high to this candle's low. Why? Because that forms our fair value gap, and it proves that there is an imbalance here where we do not see any kind of sellers or buy or any kind of sellers on this side or this side. We are only seeing it above or below. Okay. Now this is an example of something that a lot of people will get wrong, right? Because there is no wick on the first or third candle. Now, let's say we did have a wick here, right? Well, then our box just gets smaller a little bit to right here, okay? So it shouldn't be too hard, right? And drawing these out shouldn't be too bad, but this one is a pretty, normal example that you will see, and one that a lot of people will get wrong, especially when they are newer to fair value gaps. And it's totally fair. That is not an easy fair value gap to identify, especially if you are newer to fair value gaps. Now, for all the marbles, question number 3 of is that a fair value gap? Ready? Now this one's a little bit harder. I'll give you guys a few extra seconds of time. I'll actually go ahead and take a sip of my beautiful Mountain Valley water. Spill a little bit out my mouth. I didn't want that anyways. Now, let's go ahead and answer the question. Is that a fair value gap? Now, yes, it is. But where? But where? Because there are multiple possible fair value gaps or possibly not fair value gaps, okay? Now, first of all, yes, we have a fair value gap right here. From this wick to this, draw your box. Here is your fair value gap. Now, we could have had a fair value gap right here, but our wicks interlock. Okay, they touch each other on both sides, so that is not a fair value gap. Let's say this one comes down just a little bit more. Okay, obviously. There is a fair value gap here because our wicks do not touch. Okay. There isn't a fair value gap here because hypothetically this candle comes down just a little bit more and these candle wicks do not touch. Okay. So You can have something like this where you have a fair value gap right on top of something that could have been a fair value gap but isn't. Okay, you could have something like this, or let's say we don't have a candle here, and essentially at the end of the day, essentially your gap would have looked something like this all the way over to here, because you have two gaps right on top of each other. There's an imbalance from here to here where there is no retest on either side here, so there is an imbalance. And let's go ahead and jump over to the chart and talk about what this imbalance means and how we can use it for our benefits. So now that we understand what fair value gaps are and what they are actually going to represent in the market, an imbalance, now we know what we can do. We can go and wait for this imbalance to get retested, and that is what I'm going to show you guys right here. So as I do show you guys our first example, which is our bullish fair value gap, you guys can see we draw out our fair value gap right here. By the way, the first and third wicks do not touch. So we draw out our fair value gap right there, and we see if we can get a retest. Well, we end up getting a retest right here, and what do? We push off of this retest, and we continue upwards. So we are respecting a bullish fair value gap in this sense. Now, there is also the possibility of something like this, where we do disrespect this fair value gap and come down below it, come back up to it, and reject off of it, okay? Now, of course, if you're looking bullish, you want to see it respect that fair value gap and continue upward, where you can look for your long entry depending on your strategy. Now, if we see it come down below, that is a sign that either we are getting a reversal or we are going to continue back to the downside. So understand that there are still two possibilities, but once you do see a candle close outside and we see these two candles right here where we see an obvious buying out of this fair value gap, that gives you an idea that we may respect this fair value gap and continue upwards, and a lot of times you will, okay? Now it's the complete opposite with the bearish fair value gap. Once again, first and third candle wicks do not touch. They do not touch, so we have formed our fair value gap. From there, we are looking for a pullback into that zone or that fair value gap, and either a rejection or a continuation through. This time, once again, we do get that rejection off, so we come up, we respect it, and we move down. What could we have done? Well, we could have also came up and broken through it, came back down, and pushed through it, disrespecting the bearish fair value gap here. So there are two options to every side. You either go up or down, okay, right? Market's going to go up or down, one of the two. You have to be able to be reactionary and see, oh, I might see my play right here, but I want to wait and see this fair value gap get retested so my play is valid. I have more confirmation in what I am getting into, and now I feel much better. I have much more confidence and much less stress behind my play because I understand what is going on. Now, I want to hop over onto the charts. This is a current live market on QQQ. I want to break down some ideas of plays that we could possibly take. Honestly, do a little bit of back testing and see where we could get good entries, where we may have seen a fair value gap get retested and respected, or an example of a fair value gap that does get disrespected. Now, a few things that I do see when I first jump onto this chart here. First of all, we took this banger play today. It was absolutely crazy. So make sure you guys do join up on the Discord with the link in bio so you don't miss out on that shit again, because that was crazy. Now, let's go ahead and draw out some fair value gaps. Now, I see this one right here, and by the way, I'm on the 2-minute time frame right here. Now, I want to be able to draw this out and take a look at this bullish fair value gap right here. And what do we see? Well, we see that this fair value gap is respected, okay? Now, we make this fair value gap. This candle's wick and this candle's wick do not touch, so we draw the fair value gap between them. Then we see a pullback down into this fair value gap where we see strong buying pressure out of it. That is a beautiful and honestly perfect example of a fair value gap getting respected, right? Now, here is the thing. When we see respect, when we are respecting like that, we could be disrespecting something else. So as I do switch over to the 5-minute time frame here, well, we have this bearish fair value gap right here, okay? So understanding that we could have multiple conflicting fair value gaps at the same time is very, very important. But here's an idea of one where it's not really getting respected or disrespected. We're getting a bit of a neutral response to it. And this is somewhere where I wouldn't have taken a trade here. Okay, but you also do have a decent idea that you are going to disrespect it because you pop into this fair value gap and you don't reject out of it. You actually use the bottom of it as support and then press up. So not a great play, not one that I would take, okay? And that is, once again, the understanding of things like market structure, price action. You don't want to be in when this kind of stuff is happening, right? And we talked about that yesterday, but it is very, very true with anything in the market, especially fair value gaps, right? You don't want to be trading when the market is, stagnant or standstill. You want to be trading those big moves like this one, okay? Now, with this, you could have easily gotten a pretty good entry out of this gap right here and taken this entry, preferably on futures. But taking this entry right here, once you see either A, we bounce out of the zone or whatever your strategy is, or this candle closes. Okay, so this candle closes right here, and you could have ended up taking this move up, which is a great move. Just so happens that today the market did get a little bit, stagnant right there. So not the prettiest thing ever, but if you're in futures and you have the time to take and wait, you definitely could have gotten in that. Now, the play that I like more and the play that I took on one of my evals, and the reason that I'm up $780 right now, is this play right here, where we have this bearish fair value gap, right? And here is a great example of what it looks like to retest and respect a bearish fair value gap. Now, I already showed you guys the example with the bullish, but here's the bearish. So we create this fair value gap right here, right? Wicks don't touch. Okay, step one. That's what we check and we know. Okay. Now from there, we actually reject out of this zone right here. Okay. So what I would look to do is get an entry roughly around here, right? I would look to enter off of this with strong confluence that we can continue down, seeing that we did break below that and we have now made a lower high. Okay, so those are 2 points that we have right there, and we could have taken this trade right here. Now, we would have actually gotten all the way down probably to this fair value gap retest once again, and that is where we could have taken our trims, right? Because you see, once again, it is still being respected, although we are also respecting our bearish fair value gap. So we might just want to come back down to this range and retest it, and that is the same thing with the storytelling with candlesticks. Holy shit. The storytelling with candlesticks and the storytelling behind fair value gaps. It is getting respected. We are seeing that we are pushing down. We see that these candles are telling us a story of we are getting selling pressure out of these gaps, right? Then we come down to this bullish one. Well, the story is telling us that we are getting bullish price action and buyers are stepping in and buying the price up. Very, very clear, nothing too crazy, but when you look at it like that, it starts to make more sense, right? So once we do see the rejection out of here, say you don't get this play, right? But say we come back up and we retest again and you have a little like limit order or whatever on this fair value gap. Well, look at this play. Then you catch this move right here, and once again, you still get a massive bagger, right? And especially with futures, because we don't have theta to worry about, this is a great, great strategy or a great confluence to add to your strategy. So say we have the BB model right here, right? And technically we do sweep highs, so this could have worked for our BB model. We sweep highs, then we come back down, create a fair value gap, and the first fair value gap that we create and respect, okay, we end up jumping into this trade, and we would have ended up jumping into this trade right here. I mean, literally on this candle open, so right there, okay, we would have put our stop loss above that wick, and we would have probably targeted this fair value gap down here. So this is what our play would have looked like had we had taken it, right? And I ended up taking it on our evals, and I obviously sized heavy, so I was able to take $780 just like this. My play was really tiny, but still a great win right there. Now, I did just remember that I do have one handy dandy tip for you guys who have stayed and watched the majority of this video. Now, 18 minutes in, thank you for staying. And I will reward you here by giving you the fair value gap / IFVG by Nephew Sam, okay? Fair value gap / IFVG Nephew Sam. This is the indicator, okay? And this will mark out all of your fair value gaps, right? So you guys can see all of my fair value gaps are now marked out. I can honestly change some of these, but you guys can see it's very, very customizable. You guys can play around with what you guys want. You guys can extend the boxes. You guys can do whatever you want. Okay, but this is what I would use if you guys don't know what fair value gaps are and you guys are trying to break into it. Once again, FVG / IFVG by Nephew Sam. Okay, it will mark out all of these, and this is what I would recommend for someone who is newer to it, whether you understand what I've been saying or not. It will mark out these fair value gaps for you. So one, you don't have to take the time to do it. And two, you understand and can fact check yourself on, am I correct in this or am I wrong in this? What do I need to change, right? So that is a great, great resource to use, and I would definitely recommend that. But another thing is, this works on any time frame, guys. Works on every single time frame. So let's go ahead and just kind of start marking out some of these fair value gaps, right? I just kind of want to mark them out so you guys can see, because I see another great opportunity for a short right here. Boom, boom, boom. 15-minute fair value gap right here. What do? We come back up, we reject out of it, and then say you take this play right here. Well, you would be a very happy camper with a full pocket, okay? Very easy. Very easy. Nothing too crazy. Pretty damn simple, okay? And when you see something like this, what you can do is, because we technically have multiple fair value gaps. Like we have one right here. We also have fair value gaps up here. So there's a lot of gaps here, right? Of course, we are still in the direction of bearish, for this overall day and for this market right now. One, because the market looks like garbage, and two, because we have all these fair value gaps and we have obviously pushed down. Now, there are going to be scenarios like this one right here where we have this bullish fair value gap, okay? and we'll break through it. Okay, so fair value gaps aren't always going to hold, right? There's going to be some form of we're going to respect one side, then we're going to disrespect it eventually. And that is how you start to understand the reversals. Now, I quickly do want to go back and talk about that reversal because this is a sign of a reversal, right? Now, and this is how you identify. I probably should talk about this earlier, but better late than never, right? So we draw out our bearish fair value gap here. Okay, we draw out our bullish fair value gap on that playback here. Okay, let's say it's just this right here. So we now have a bullish and a bearish fair value gap, right? So we know that we are respecting bullish fair value gaps right here. We know that price should continue up, right? Yada, yada, yada. You are pretty bullish. Okay, your bias or your idea of the market is bullish until you start respecting bearish fair value gaps and disrespecting bullish fair value gaps, if that makes sense. Okay, so you are bullish when you are respecting bullish fair value gaps and bearish when you are respecting bearish fair value gaps. So one of the best ways to identify a reversal is looking for that first fair value gap on the 1, 2, or 3 minute. Okay, you're looking for that first opposing fair value gap to get respected. So in this example, we're moving up. We respect the bullish fair value gap. We're expecting price to continue to respect bullish fair value gaps and continue up. Well, we end up creating a bearish fair value gap and respecting that, showing us that now sellers are in control and they want to take over that imbalance and continue to shove price down. Now, does that mean in 20 minutes that we can't come back up and go like this? No, we can 100% do that. But I'll tell you one thing: if we do that, yeah, if we do that, I bet you there's a scenario where we have a bullish fair value gap and we come back down and we retest it, right? And then once we retest it, I could say, oh, most likely we will break through this bearish fair value gap because we're now respecting bullish. Okay, so that's kind of how you have to run that through your mind and just kind of get the understanding of what it's going to look like when we get there. Now we'll talk about liquidity tomorrow, and fair value gaps and liquidity kind of go hand in hand because these fair value gaps are like a magnet. Okay, you want to see price go towards the fair value gaps. Okay, and that's what's going to happen. So for example, on the higher time frame here, we have a big ass fair value gap right here. Okay, big old fair value gap that gets filled. Okay, and we'll see what happens in this fair value gap once it gets created because we will have this roughly as our fair value gap soon, if this all holds, of course. So this will be our bearish fair value gap. We came down, we broke through this bullish fair value gap, this bullish fair value gap. Then we're now breaking through this bullish fair value gap. So we will have to see if we do continue to respect the bearish fair value gap. What do we guess? Well, I could tell you, I guess that price is going to go lower. Okay. Now, if we do bounce out of this fair value gap, even though we broke through the bottom, that's okay. Even though we broke through this bottom, if we come back up and we see a strong bounce and we do respect it, that is fine as well. You're not going to see it perfectly respected every time, right? For example, here's a bearish fair value gap that we disrespect pretty much immediately, right? So we create this bearish fair value gap, but we pretty much break right through it. I mean, there's not much time between us creating that and it being done, okay? So we break right through it, and this is an example of an IFVG. Now, personally, I don't take IFVGs too serious. I think that it is a little bit... I think that people start to overcomplicate things when they get into IFVG, so I don't like to talk about it, okay? I leave my fair value gaps drawn up on the screen and I just kind of pay attention to how they are getting respected or disrespected, whether it is recent or not, right? So here's an example of what people would call an IFVG, okay? And this is essentially where you have something that's broken through, so it clearly gets broken through, right? And this fair value gap is pretty much invalid at this point, right? It was disrespected, it was broken through. But you can come back down and respect or retest these fair value gaps anyway. And, you know, that's why I'm not a big fan, because the imbalance has been filled. So it's, you know, you can follow them if you want. Personally, I don't. I just pay attention to how they are respected, okay? If they are respected, great. Works in my favor. If not, great. It doesn't, right? So keep that in mind. That's an IFVG. It's the same exact thing. Just once the fair value gap gets broken through, you can come back down and basically retest it. And you could see that we could possibly move off this IFVG here. Now, of course, that's not going to happen every time either. That's why I don't pay too much attention to it. But just like everything else, it's always nice to have an understanding of the market. So understanding that is a pretty good deal here. Now, another thing is like gaps like this. It's going to take time to fill gaps like this, right? So you have to just be understanding of, well, we might not know for a while, okay? We might not know for a while if we are going to respect this or disrespect this. Because look, we respect it here, we respect it here, we respect it here, then we finally break through it, okay? Then we come all the way back down, and this might have turned into an IFVG here too, where we are going to come all the way back down, right? And we could see it turn into our IFVG if we come back down, respect it, and, you know, something like that. So there are a bunch of possibilities with this, and I know this is one, a lot of information, and two, I kind of am going back on my words and saying, this could look like this, and this could look like this. But I really want you guys to understand the difference between understanding, right? Understanding and knowing. People who think that they know stuff, okay, are going to be very, very biased and one sided. You do not want to be stubborn when trading, okay? I want to say, hey, this fair value gap got respected, right? This bullish fair value gap got respected. I'm expecting the price to move higher, but I do want to make sure that this bearish fair value gap above us doesn't get respected and we push back down. I want to make sure that we break through this bearish fair value gap. And although we respected the bullish, that doesn't mean I'm going to neglect the bearish, right? Because you want to understand not only where is price looking to go, how is it going to get there, but you also want to see what are the obstacles that we're going to have to get through. Are we going to have to get through our resistance? Are we going to have to get through our fair value gaps, etc., etc.? So, for example, something like this. We all know what support and resistance is. That should be light work, okay? Let's go ahead and draw out this bearish fair value gap again. Now, let's say this bullish fair value gap continues to hold like it's looking like it looks like so far, okay? And we can also see another example down here. So here's a bearish fair value gap that we are now breaking through. So look, we are respecting the bullish, okay, and clearly disrespecting the bearish. So where do we think price is going to go? I would have to guess that price is going to look to move higher, okay? Now, once we get up to this gap, once again, we could clearly reject off of this gap because why? Well, it hasn't been retested at all. So we could just be coming back up to this gap to reject off of it, okay? We could also be coming back up to this gap to blow right through it. We could also be going like this, okay? And that is what price action is going to tell you as it starts to play out, right? Now, for example, if this is now our IFVG, okay, and you want to follow IFVGs or just leave it as a bearish fair value gap, well, if we come back down and we retest this and the bullish fair value gap and we respect it, that's going to give you a lot of confluence. And I may actually hop in this trade to prove a point to you guys, because if we do come back down and retest this bullish fair value gap and move off it again, I will be taking this play. Now, that is all you guys need to know about bullish, bearish, and IFVGs, sort of. But the bullish and bearish fair value gaps are very, very, very important. And it is very important to pair it with things like, for example, we took this play last week like 3 times, okay? This is our orb right here, drawn out. We were able to get some fair value gaps right here, right around orb, okay? So once we were able to see that our orb is being rejected, which is one of our needs for us to enter a trade, and we were also seeing that our fair value gap is being respected, well, goddamn, those are very, very bullish as in confidence building confluences for our trade. Whether we are looking to see some bearish price action or some bullish price action, it is very, very bullish for me personally to see our play get very, very nice confluences, very good respect, and you guys can see that price action does play out in that way when it does happen. So there is most likely another fair value gap up here that we probably retested somewhere. Technically here. I mean, technically here. Look at that. Technically here, you could have taken this and had a fucking day. Could have had a day, boy. So that is all I have for fair value gaps here. Let's see, we are about 30 minutes in. That is most of what I wanted to tell you guys. I feel like I was able to once again depict that pretty well. So if you guys do have any comments, questions, concerns, anything like that, please drop them in the comments down below. Now tomorrow we are going to be covering liquidity, and liquidity is a very, very important subject and topic to go over. One that is not the easiest, much like fair value gaps. Not the easiest. If you figured it out today, great. If you didn't, don't get discouraged. Rewatch this video or go look up on YouTube other videos about fair value gaps. I'm not going to be mad that you're cheating as long as you come back, okay? Right? So, do your research on fair value gaps. I hope that that was a good little intro to fair value gaps. If you guys are in our Discord, we have multiple channels about fair value gaps where you guys can go check it out. By the way, if you guys are in premium, you're the GOAT. Our fair value gap lesson is in the intermediate section of education. Okay, so go check that out. Make sure you guys continue your learning. Come back tomorrow for that liquidity video. And also make sure you guys do drop a like and subscribe, as one, it does help out the channel. And two, you guys can get access to a free eval if you guys drop a like. We get 50 likes. And you click the first link in the description down below and join up on our free Discord. And show up for our live trade tomorrow. We hit over 225% on our live trade today. So I wouldn't miss it if I were you. Now you can do whatever you want. But we absolutely killed it. So we're going to do the same tomorrow. That is all I have for you guys. Any closing thoughts? Any closing thoughts? Any closing thoughts? Oh, if you made it till the end, comment kendama. Y'all ever played with a kendama? Never mind, I'm not gonna do that anymore. And last thing, bro, look at this. My girl got me this, bro. Isn't that sick? Nobody docks my last name, bro. You can't even say it, I promise you. But that's it for me. That's all I have. Yeah. Drop a like, subscribe. Come back tomorrow. Thank you guys for joining up on the boot camp, and deuces.